Welcome to the Half Empty, Half Full Consumer Advocacy Radio Show. Listen in nationwide on the Tan Talk and Starcom radio networks with your host, Laurie Zoock, the consumer champion. Each week, we'll be discussing problems and solutions, changing negatives to positives, and helping you, the consumer, to learn something new. Get smarter faster and avoid scams and fraud. All opinions are that of the host and guests, and all shows are for educational purposes only and not to be construed as legal advice. Here's your host, Laurie Zoock.
Welcome to the show. Each week we'll be discussing problems and solutions, changing negatives to positives, and helping you, the consumer, to get smarter faster.
And today I am Kris Dunn filling in. I will be the host and I will be interviewing Laurie Zoock. Laurie's the host of the show, except for today, where I will be asking her questions about consumer credit problems. Welcome to the show, Laurie.
Well, great. Thanks for having me, Kris.
So tell the listeners, a little bit about yourself and your background.
Okay. Well, I am a consumer credit consultant, and I'll give you the definition of that.
I was going to say, and what does that mean?
Let me tell you what I'm not. I don't do credit repair. We're going to talk about that a little bit later in the show. What I do with clients is I do a consultation to determine where their credit's actually at. And then for a 90-day period or longer, if they want, I actually teach them how credit works and how they can best attempt to resolve their various issues. So it's a learning experience for clients because, first off, if somebody does something for you, whoop-de-doo, guess what? You're going to fall back in the same boat and you're going to end up with bad credit again because you didn't learn anything. So my entire goal is to be able to teach people that want to learn what they need to know about consumer credit.
Okay, well, what should consumers know about their credit report specifically? And more importantly, why is that information important?
Okay, good question. Consumers should know everything about their credit reports because your credit worthiness, your credit risk is determined by what's on your credit reports. Most people have no clue what's on their reports until they want to do something important like purchase a house or purchase a car, or if they want to get credit cards. And it's important because a lot of times people get surprised. When they want to purchase a home, for example, and they go to a mortgage originator, that person pulls the credit report and they think they may have great credit. In reality, they may have really horrible credit and they have no idea why. And that could be due to a number of reasons. They may have defaulted on credit cards, for example, or they might be a victim of identity theft. They don't know. So you should be checking your credit reports at least once a year so that you can protect yourself because you could be the victim of identity theft and you're going to end up, with some serious issues.
And not even know it. So for the most part, do people just go and try to get a car loan and go and try to get a home loan, and then that's when they find out their credit score?
Yes.
How do you...
That's what most people do, and that's when they're in for the nasty surprise. And that's a terrible way to find out, especially if you're in a situation where you are getting out of a rental and you're on a tight deadline, and maybe you have looked at a house and you want to put a contract on it. Whoops! Now you have your mortgage person pull the credit. And you have no idea what all this stuff is, or you didn't keep up with collections, or maybe you moved and you didn't get notices. And that's when people are in for the nasty surprise.
Okay, so that's the bad surprise. I mean, how else can you... there's got to be... If that's the bad way, that's the nasty surprise, there's got to be other ways that you can find out your credit score, know on a regular basis what it is. How do you do that?
Yep. Consumers can get their credit reports for free once a year through a website called annualcreditreport.com. And they're going to ask you a lot of security questions to get those reports. However, you have to pay each of the three credit bureaus. The big three are TransUnion, Equifax, and Experian, and you're going to have to pay them to get your scores. Now, there are other ways of getting them. You can go through a website called myfico.com, which will give you your real FICO scores and your real reports, but it runs about $50.
Okay.
You can also use a credit monitoring service. A lot of my clients use an easy-to-read one called creditreport.com, and it will show you all three credit bureaus on the reports. However, when you use a monitoring service, It's not your real FICO scores. It's a different scoring model entirely. And people sometimes get confused when they go to a credit monitoring service and they look at their scores thinking it's a FICO score. And then they go to a mortgage lender or, an auto dealer and they have their credit pulled and they go, well, wait a minute, my scores were much higher on the monitoring service. Well, that's because they're not using the real FICO scores.
Okay, so the website that you said you can get it once a year for free was
annualcreditreport.com. And actually, you're making me think of something else, Kris. Right now, a lot of people use a site called Credit Karma, KARMA.com.
Okay.
Now, being a credit consultant, of course, I test everything myself, and it's a free site. However, that site, it's owned by TransUnion, and the information, first off, it's FACO scores, we call them in the industry, as opposed to FICO. They're fakes, but it does
so
not.
So clever.
I know. But it doesn't list accurate information. It's what it is. It's a site that TransUnion owns as an incentive for people to do things that will actually harm their credit. What I mean by that is they will have offers of doing balance transfers. Now, anytime you apply for credit, you get points off your score. If you close a credit card when you do a balance transfer, it takes points off your score. So it's actually, in my mind anyway, a fairly dangerous site because it actually damages it. But what they're trying to do is get you to change from one card to another. Not a good idea. Not a good idea at all.
You said earlier that the thing you are not is you don't do credit repair.
Right.
What is credit repair?
Good question. Well,
because I just think, what's my credit score? I have a credit card. I have a car loan. I pay it off every month or every week or whatever your payments are.
Right.
And that's it. And I assume that if I make all my payments and I have 3 loans and I pay them off, that I have the best score.
Well, there's a multitude of factors that come into having a good score. Very important is, how do you pay? Do you pay in a timely manner? Or if you have late payments, guess what? You're already in trouble. How much of your available credit have you used? If you've maxed out using all your credit cards and you're up to the top of whatever the limit is, your scores are going to go down. The length of history, the longer you have your credit cards with perfect payment history and low balance or no balance, the higher your scores will go.
Now, no balance is good? I've heard no balance is bad.
Well, good question. It depends. If you are making a purchase of a home and you want a higher FICO score, you need to leave a tiny balance. I'm talking like $50 on your credit card, because utilization of credit will then show up, and for whatever reason, it boosts the scores up slightly. However, if you're not making a major purchase like a home or a car, and you want to your scores don't need necessarily to be that high because you don't have a purpose for it at that point, and you don't want to pay interest, then pay off all your credit cards. Depends on what you're using your credit profile for. There's a lot to credit, and people don't know it. And to answer your earlier question about credit repair, it's a big red flag to me. The majority of companies that do credit repair act so in a fraudulent manner. What do I mean by that? There's a federal law called the Credit Repair Organizations Act, and it basically states that if you are making promises, you're going to increase a client's score, for example, you're making some type of a promise. That law says that you cannot charge that client or that consumer any money until the work is completed because you made a promise. Well, unfortunately, the industry really is not regulated. The regulatory agency is the Federal Trade Commission. They really don't care. They don't have enough manpower to monitor all the companies that, offer credit repair services. The other thing people don't realize is that with credit repair agencies, when you hire this company, they're not telling you what they're doing, but the majority of them are disputing items with the 3 major credit bureaus under the premise that if they don't get a response back within 30 days, it's going to come off your report. Well, I don't know, how consumers, they read all this information on the different websites. They're made all of these promises. I want to give you the reality of the situation. You might want to dispute with the credit bureaus once, only to protect your rights under what's called the Fair Credit Reporting Act, which basically states that the information that these companies report has to be accurate, even though, in my opinion, 70-80% of the time, it's not accurate. But All that happens when you dispute with the credit bureau is they send a 2-digit code to the creditors or collection agencies that you're disputing about. It's done by computer. It's an almost instantaneous thing. So when that creditor or collection agency gets that little code, they're not seeing your letter, just the code. They're looking in their computer and it responds back almost automatically. So again, no one's looking at any papers. Whatever's in their computer is what's being reported back. The credit bureaus are paid by the creditors and the collection agencies. So the credit bureaus are going to side with their paying subscriber. That's the creditors and the collection agencies. It's not you. So disputing with the credit bureaus does very little. You can dispute twice under what's called a reinvestigation. But again, unless you actually have documentation to prove that they're reporting something incorrectly, or if the company that you're disputing about is out of business, then it might come back or it might come off the report. But it's really difficult. Credit repair companies typically bill clients, I'm going to say on average about $100 a month, and they'll do it for 1 to 2 years. What they do not tell the consumer is that the third dispute, if you don't have proof of that credit line, of the inaccuracies, it will come back marked frivolous and irrelevant, meaning they're no longer going to consider a dispute. Well, then what are you billing these people for $100 a month for 1 to 2 years? So the majority of them are totally useless, in my opinion. You have to deal with the source, which is the creditors and the collection agencies.
And that explains why you don't do it.
Yeah. You know why? Because I want people to understand how it really works. But I think that most people, for lack of better words, they believe everything that they read on the internet. They want to believe that bankruptcies and judgments are going to disappear off their credit report. Guess what? They're not. And if they do, they typically come back. So you have to deal with the source.
All right. There's a couple things that I want to touch on that you mentioned in the beginning that I, kind of want to talk to you a little bit more about and kind of give the listeners a better idea of who's out there when it comes to credit scores and everything.
Okay.
But we're going to take a quick break and we'll get back to that on the other side.
You bet.
Do you suffer from back, neck, or body pain? Do you suffer from migraines or have jaw or face pain? Has conventional medicine failed you? Were you injured or in an accident? Call chiropractic physician Dr. Dan Maddock at 813-935-1664. Dr. Dan has helped thousands of patients gain relief for more than 30 years. Dr. Dan is caring, gentle, and takes his time with each patient. He's also a past president of the International Craniopathic Society, a special certification of only 300 chiropractors worldwide. Dr. Dan helps patients from the neck up and the neck down. Dr. Dan accepts most insurance plans. Don't continue to live in pain. Call 813-935-1664 today. That's 813-935-1664 and get on track to better health. Consumers, do you have bad credit? Can't purchase a house or car? Paying too much in interest on your credit cards and loans? Scammed by credit repair companies? There is hope. You can get back on track and do it the right way. Call Credit Education Consultants today at 813-500-6064. That's 813-500-6064. Or go to crediteducationconsultants.com now and get the help you need. Don't delay. Call today. Mortgage reps and realtor inquiries are also welcomed.
I've paid my dues time after time.
All right, and we are back on the Half Empty, Half Full Talk Radio Show. As I mentioned before we went to the break, Laurie, there's a couple things that you talked about right when we started. And one was the FICO score.
Mm-hmm.
How do you get your, what determines the FICO score?
Good question. Now, FICO, Fair Isaac and Company, many years ago developed a scoring system with a secret mathematical formula or an algorithm that they do not disclose. It's kind of like the secret Coca-Cola formula. And
Mom's secret recipe?
You got it. And each of the three big credit bureaus uses a slightly adapted version. Now, also, just so you know about FICO scores, there are hundreds of types of FICO scores. The most common ones are, used for mortgage. There's a different one for, say, insurance, and a different one for car dealers. So FICOs can vary widely. But to give you an idea percentage-wise of what determines your FICO score, 35% is determined by your payment history, 15% is the length of credit history, 10% is the amount of new credit applied for, 10% is the type of credit used. Do you have a good mix of credit, revolving credit, installment credit? Do you have a mortgage? Do you have a car?
The type of credit, really?
Yes.
10% of your FICO score is determined by whether you have a boat loan versus a Macy's credit card versus a home loan?
Yes, because there are different, right. Because
so it's like diversity of credit.
You got it. That's exactly what it is.
Wow.
Yep. And the last thing is 30% is determined by the amounts that you owe on those loans.
Now, I have a question.
Sure.
What difference does it make? Okay, like I said, diversity of credit.
Right.
Who cares? If I have 4 loans out, who cares if they're 4 auto loans? Who cares if they're 2 auto loans and 2 home loans? Why does the diversity of my credit matter?
Right. You and I might not care, but FICO cares. And the system that FICO developed that has this diversity is used in their secret mathematical formula to determine those scores. So, it's not like it was maybe 30, 40 years ago where you go into a bank and, they might do a check on you, but there were no credit reports per se. So it might have been done on honor, respect, and a handshake. Nowadays, it's all done by what is your score? And if your score is not where it needs to be, you're not going to qualify. Also, the higher your scores are, FICO runs from 350 at a low to 850 at a high. So if you're at 780 and above, you're platinum. You can pretty much go out and get just about anything. But the lower your scores are, the higher the interest rates are that you pay. And that kind of scares me because, if you go out and buy a house and you have a 640 score, you may be paying way more, not only in monthly payments, but over the course of the 30-year loan, you could easily quadruple the price of that house. You bought a house for $100,000. The way that the interest works is in the end at 30 years, if you're there that long, you may have paid $400,000. Whereas if your scores are higher, maybe the house is only, 2.5 to 3 times the amount. So there are a lot of free tools online that will show you how a mortgage loan amortizes so you can see what you're paying in interest. And that's where your credit scores are important. And, if you have low credit scores, it's very difficult to get any loan at all. But again, you're paying those really high payments because it's so bad.
Okay, and now the FICO scores are determined by these credit bureaus,
right?
Correct?
Yes.
And you mentioned the big 3.
The big 3 are TransUnion, Equifax, and Experian. Sometimes people think they're government corporations. They're not. They're actually 3 for-profit corporations.
Okay.
And those are the ones that are used most of the time.
So those are the big 3. But how many? Obviously, there's more than 3. If those are just the big 3, how many bureaus are there?
There are probably hundreds of smaller ones, and they might be used for more specialized types of, for example, there's another credit bureau that just does medical. So if you want to see what's been reported about you by your insurance companies, then you can go to that.
Like your health insurance company or something?
Yes.
Okay.
Exactly. So that's something you can check out. But, for the majority of purchases or credit line loans, you're looking at TransUnion, Equifax, and Experian.
Okay. And now as a credit consultant and coach, are those things that you sort of deal with, that you sort of guide people in?
Yes.
As I guess as a coach, what are you doing to help the consumers figure all this mess out? Because to me, it's a mess.
It is. And what I do is a 2-step process. So in my first step, and I do charge a fee, which is very reasonable actually, but what I do is I analyze their credit reports from the 3 credit bureaus onto a spreadsheet where I am looking for any potential issues without too much input from the client. I can read the credit reports very well, of course. So I'm looking for are things matching up? For example, if you defaulted on a credit card, let's just say you defaulted 8 years ago, and it's still showing up after the date that you initially defaulted, it's past the statute of limitations for credit reporting, which is a federal law. It's 7.5 years. Now, a collection agency may have purchased that debt, but they may have purchased it a few years later. However, they're required to put the date you initially defaulted from the original creditor. So I'm looking for, how do things match up? Do they fall within the statute of limitations for credit reporting? And do they fall within the statute of limitations, which is different by state, for collection? So for example, in the state of Florida, on most debts, there's a 5-year statute of limitations of collection. If you had defaulted, let's say, on a credit card. But it's
so if my credit card goes into collection and I for whatever reason can't pay it off, and it goes to collection, and the collection people start calling me, in theory, after 5 years, they can't call me anymore?
Well, good question. They can't legally collect. However, people don't know the law. And what happens is they pay it. What they don't realize is when you pay off your collections right now, it actually drops your score down.
So what are you supposed to do?
You got to try and negotiate whenever possible to get that item removed off your report. So a lot of companies will negotiate. A lot of times it depends upon how much you're willing to pay. But if you negotiate, it has to be in writing. It can't be a phone call because phone calls don't count. If you get an agreement in writing and they delete it, then your scores will go up. Now, I got to touch on one other topic. Right now, FICO uses software FICO 8, it's called. And if you pay the collection, your scores are going to drop like the bomb. However, when FICO 9 came out recently, I don't know anyone who's using it yet. It could take a year or two to implement new software. And what they're claiming is if you pay off a collection, it won't drop the scores. However, if you don't negotiate and try to get it off, your reports, then your scores aren't going to go up either. So you can kind of get an idea from talking to me. In the second step, what I do is review that client's, after we've done the initial consultation and analysis, the second step is actually helping them with all of their specific issues by teaching them and providing information for them to attempt to best resolve it themselves. So where I'm different from a credit repair agency, first off, you have to be proactive in learning what it is because it's your financial health, basically, of knowing what's going on in your life. No one's really going to clean up the mess, whether you made it, whether you were a victim of identity theft, whatever the story was. You have to be the one that wants to learn how to best try to resolve these issues. So when I work with a client, I tell them up front and in my service agreement, I can't guarantee you anything. I can guarantee you if you do nothing, it will get worse and worse, and you'll end up in more and more trouble. If you're proactive and you start learning what you can do and you apply those methods, there's a pretty good chance that you're going to be able to improve your scores because you are working on the actual credit items themselves. If you do nothing, gonna get worse. If you do something and you learn how to do it, well, now you have a skill. You've learned something, right? Because knowledge is power. Once you get through the process, you're never going to want to do it again because it's not easy to resolve things like that.
Oh, it's a mess.
It's a big mess. And so basically, you're cleaning up your own mess. And then if you ever were to fall into that situation again, at least you have some idea of how to resolve issues.
So I got to know, how did you, because I'm learning all this basically right now through you.
Right.
But obviously, if you're in a position where you're a coach, where you coach people on how to get out of debt and, clean all this stuff up, how did you learn all this stuff? Like, what did you do?
Interesting question. Growing up, my parents were very big on finances and not owing money, being responsible, paying on time. So a lot of it I just learned from family growing up, but I don't think most people's families teach this, and it's not taught in schools.
Not unless you're Dave Ramsey.
Yeah, exactly. And then when I moved here back in 2005, I actually was licensed as a realtor. I didn't work as one. And I worked on a team where somebody was trying to help people with their credit. And that person left. And I ended up kind of jumping in there to learn it. And I'll tell you, honestly, I remember crying. I went, geez, there's, tons of different types of credit reports, and they all look a bit different. And you have to understand what all the terminology is. You have to understand what the dates all mean. A regular person cannot read a consumer credit report. So it's designed to not be consumer friendly. And that's probably done on purpose, because if you don't understand it, most people are going to go, I don't understand it. And, oh, well, I'll throw my hands up in the air and I'm not going to learn anything. I was pretty much forced to learn. And to me, it was a puzzle. And after I got over the initial shock of learning how to read them, then I had to figure out, well, why, when you send letters to companies or credit bureaus, do they not respond with the information that was requested? How does it work? It was a long, drawn-out puzzle to try to figure out the different aspects. So that's kind of how I got into it. But I am not an attorney. And sometimes there are legal issues involved. So if I have a client, for example, I had a client call me yesterday and say, hey, I have a problem. I have a recent auto repossession, and it's holding me up from getting a mortgage. Well, I can't help that fellow. I'm not a lawyer. So if I see it's a legal issue, I have to refer them to an attorney that will determine if there is a legal issue. Same thing with debt collection. If you're getting phone calls and you're getting harassed by a debt collector, and some of them can be really nasty, they'll call your family, they'll call your friends, they'll track you down through the...
They'll call you at work.
Oh, anywhere, DMV. We're going to arrest you. We're going to publicize that you're a deadbeat. Well, there's something called the Fair Debt Collection Practices Act, and in Florida, it's called the Florida Consumer Collection Practices Act, the state law, which is actually a little bit stronger than the federal law. But what that does is it protects you as a consumer. You have certain legal rights, and there are certain things that debt collectors cannot do. So, people have called me up crying in tears that they're afraid of what the debt collector is going to do to them. And instead, what they should be doing is logging down everything that the debt collector said, and then through me, they can contact an attorney here, or I will forward the information to an attorney for evaluation. He'll then speak to the client, and if he determines that indeed he believes they violated the law, he'll file suit against that debt collector. So typically, it's a $1,000 statutory violation that the client could win, but if the debt exceeded that, a lot of times they just remove it from the credit report. But hey, that kicks your score up a lot because the debt collector screwed up legally.
Not your fault.
Not right. And now the client's happy because their scores went up. So there's a lot of different factors.
Okay. All right. I want to ask you about some stories because I bet you've got some really crazy, wild stories about people in debt and how much money they owe and how they get out of debt and what they did to get out of debt. And I'm sure that, they're helpful. The best way I think for me, one of the best ways to learn is to hear stories of how other people did it.
Sure.
So when we get back, I'm going to ask you to tell us a little bit about.
Hello, I'm Jim
some of the stories that you've
Velasquez.
encountered.
Does getting a lousy
Good, bad,
1%
if you
on your
can,
CDs
obviously,
make
whatever
you
you
sick
can,
to
go
your
ahead.
stomach? Inflation is hovering at 3%,
We'll be
so
back on the other side
what's really
of the
happening?
half-empty,
Allow me,
half-full
Jim
talk radio
Velasquez,
show
to
with
send
your
you my
host,
free
Kris Dunn.
report. If you
Interview
haven't reviewed
Laurie
your
Zoock
CDs
today.
in a
We'll be
while,
right back.
don't get this report. It will break your heart. If you want to fight back and beat the bank, text RETIRE to 72727 for this free report. Let's beat the bank. Text RETIRE to 72727 for your free report.
Time after time, I've done my sentence.
All right, and welcome to the story time segment of the Half Empty, Half Full Talk Radio Show. I am your host, Kris Dunn, filling in and interviewing the consumer champion, Laurie Zoock. So, Laurie, tell us some stories. What have you encountered? What's the most bizarre story you've ever encountered or instance you've ever come across?
Okay, I'll tell you a bad story.
Okay.
Okay, a prospective client contacted me, somebody that I knew, and he wanted me to, I love the words, fix his credit, his wife's credit, and his niece's credit. He was a realtor and investor, and he had destroyed their credit. And what he wanted me to do was to go to one of those postal box places and open up an account in my name and then add his name, his wife's name, and his niece's name onto this box. And he offered to wire me a large amount of money, and I would be opening all of the mail and, quote, fixing his credit. Well, I had to disassociate from that because, first off, by law, with the mail laws, I can't open anybody else's mail. Can't do that. Secondly, this person didn't want to take responsibility for the fact that they had overextended themselves. I do remember there was a $30,000 credit line for Kane's Furniture, which of course he got. He just didn't want to pay for things that he was legally responsible for. And in essence, what he was asking me to do was to commit a criminal act.
Is that a characteristic of being impulsive?
In this particular person's case, I would say yes. And some people want to give the idea of living very wealthy when in reality, they're not wealthy at all monetarily, especially when they're taking advantage of other people. Mm-hmm. So whereas he in his mind probably thought, hey, he's offering me a large amount of money and that I would fall for it. The truth is it's unethical, it's illegal, and therefore I can't do it. Right. So at that point, I just sent a one-liner. Sorry, I can't do that. Non-negotiable. Can't do business with you because I won't do that type of business. There are some happy stories that came out of sad stories. I had a client who had an illness, who was divorced, and who had a lot of credit issues. And I am pretty much a type A person, as you well know. You can hear I'm always on high speed. And I worked very well with this client because she was the same way. And no matter what, she, my slogan, I guess, would be, don't give up. The persistent person who keeps doing it, who keeps contacting companies, who wants to negotiate, eventually they're going to get somewhere because they are persistent rather than the person who just sticks their head in the sand.
But that's hard sometimes, right?
Well, it is. But, she wanted to get into a house very, very badly. And I'm going to say it probably took about a year, but she eventually was able to purchase a beautiful home. And I was the first person invited to come over and see that home. And we are good friends to this day.
What was for dinner?
Actually, I didn't stay for dinner. I just went to see the house.
You didn't get dinner.
I didn't get dinner.
Deal.
No. But the funny part is, I'm actually meeting her for lunch tomorrow. We become friends.
Well, what's for lunch?
Ballyhoo's, which is a great seafood place up in Carrollwood. But I've had clients who are not quite that type A personality. Those are the ones who do best. I had another client who, contracted me to help him. And sometimes I'll get clients who they get to a point where they're ready, they've done some of the initial work and they can't seem to handle all the different issues. And I'm good at multitasking. So my job in coaching them is to kind of light a fire and say, yes, you can get to the next level. Here's the information that you need to know. You can do it. I have to motivate people to be able to do it. So, but you also, as the client, have to be want to be motivated. And usually those clients are the ones who are getting into homes, making a large purchase. If they're a victim of identity theft, for example, and their credit's been destroyed and they're panicking, I have to be able to motivate them to learn the information and teach them what they can do legitimately to try and correct certain issues. Again, there's no promises. When someone comes to me and says, I want you to fix my credit and I want you to take these items off of my report and get the bankruptcy off and get the child support off, I think, oh my gosh, you must be reading all of those scammers that offer credit repair on Craigslist who say, we're going to do that for you. Let me tell you, run the other way, because there are federal and state laws that say this is how it is. And if someone's telling you they can do it, geez, I hope they're not charging you money up front. But a lot of companies also do illegal things. For example, they'll come up with something called a CPN, or a credit privacy number. What it is a 9-digit number that looks like a social security number or an EIN number, a business account number.
Okay.
And they'll use that to develop the second profile. What they don't tell you is it's not the use of the number that's illegal. First off, if you're using that without disclosing to a creditor that it's a different number, there's going to be an issue because they're not going to allow you to do it. They want the Social Security or the EIN number. So a lot of times that number can be the Social Security number that is from a deceased person, because there are brokers that sell these lists. It could be a Social Security number not yet in use. But you are doing something illegal as the consumer. And ignorance is no excuse for the law. If you do it and you break the law, you're going to go down. So you have to do it the right way. The right way is to learn, how does it really work? Help yourself.
So much.
It's a lot.
Now, a lot of people have, especially in the last year or so, have come across issues. I think you and I have talked about the whole Target issue.
Right.
With credit, with ID theft and things like that. First it was Target, and then I think it happened at Walmart. It was another big box company or something. Yeah.
There have been a bunch of them.
So what do you do? I guess, what is the first step if you think that you have been victim to ID theft, or for a fact that you have? What do you do?
Well, you need to review your credit report immediately to see what is reporting on that report.
But you have to pay for that.
Unless you go to annualcreditreport.com. That's the free one that you get once a year.
Now, you can't get let's say you think that you're a victim of ID theft. You can't get a free
Yeah,
copy of your credit report just because you...
Yes, but that's the one you do through annualcreditreport.com. That's the free one.
Okay.
Which you can get more, I think it's 3 times a year if you're a victim of ID theft.
Okay, that was my...
Yeah, you want to see what's on that report, and then you want to immediately call each bureau to be safe and place a temporary fraud alert immediately.
The big three?
The big 3. Then what you want to do is fill out an identity theft affidavit, which is actually on the FTC.gov or Federal Trade Commission, FTC.gov website. And you're going to list everything that is not yours. You're going to have that document.
When you say list everything,
list all the credit items. If somebody's been opening up credit in your name, you'll see it on the report. If you know that it has, an account with K Jewelers and you've never had one, and somebody's using your information to open up these accounts, you list all of those accounts on the ID theft affidavit.
Now, do you also include, let's say somebody went to the bank and withdrew $2,000 from your account?
Okay, different animal, because that's not credit. That's actually cash.
Okay.
Okay, but I know people that have been in that situation, and if you are a victim of ID theft, you need to go to your bank and alert them right away. Now, here's the scary part. Some banks will tell you, well, we'll give you a password. Sorry, not good enough. You need to actually close your accounts, in my opinion. This happened to my parents. You need to close your accounts entirely so those account numbers no longer exist.
The bank account.
The bank account. And then reopen bank accounts with, a new number to protect yourself. Hackers outsmart people all the time. They outsmart the computer software all the time when they hack into these companies. You want new account numbers to be safe.
But now, does closing the account and opening a new one hurt your credit score?
Well, if the accounts were not yours to begin with and someone else is using them, it doesn't matter. You know what I'm saying? They weren't your accounts to begin with.
What if it's my bank account and I get robbed and all of my stuff gets stolen, and then I find out that money is being withdrawn out of my account, credit cards are being opened in my name.
Right. Well,
I close out my account. It was my account.
Well, in that case, typically what happens is they'll report it on your credit report as credit card lost or stolen. So let's say you open that account hypothetically a couple of years ago, and somehow they gained access to that account. Then the credit card company will mark it lost or stolen. They'll reissue you a new card, but they now have fixed it on your report. That's the goal. And then it will report accurately from that original time that you opened it up.
So it doesn't look like a negative on me.
Exactly. Now, if somebody has used your credit and is opening new credit lines and they're spending money, which is what they're going to do, they're actually going to destroy your credit, then once you get those items removed using an ID theft affidavit, your scores will go back to where they were. But a lot of people don't think about it until it's actually happened and they've become a victim. So preliminary thought would be, make copies of all of your credit cards front and back. Okay, I had my purse stolen a few years ago. Fortunately, I made copies of everything. So I was able to call all of the creditors, my credit card companies, and say, hey, my purse was stolen. And I was able to get to the fraud department reasonably quickly. I did file a police report, which you should definitely do if you're a victim. You can attach that to the ID theft affidavit that you're going to send to the 3 credit bureaus because they're going to ask for the report number. And that will help you as far as the reports go. As far as the money end, there are plenty of people that scam you for the money. What's scarier about the money is it's not like credit where the credit card company has a certain amount of liability. Like they'll say you owe nothing, or some of them will say you only owe up to $50 if you report it within a certain amount of time. If somebody gets to your bank accounts, you'll eventually get the money back, but it can take weeks to get the money back. And hey, how long can you go without money?
Right. Well, and like you said, that's to me the scariest part, because now you're worrying about people opening up credit cards and accounts, but now you're also worrying about your actual bank account, your cash that you use,
right,
just being taken. Well,
when I make a purchase, Kris, I use credit cards. I do not use debit cards.
I just pay it off.
Yeah, as soon as I use my credit card, I don't necessarily wait. I don't like to owe any money. I use it for merchant protection if I've made a purchase. I don't use the credit card with the exception of, say, a medical emergency, unless I know I can go home and write out a check. I can pay it off right away. But people tend to live way beyond their means. They want to have, the best of everything. And the next thing you know, they're in debt for thousands of dollars. The average interest rate probably now is somewhere around, 18 or 19%, and it can go considerably higher depending upon your scores. And if you actually were to look at your credit card statements nowadays, it does show you how much money you've spent in interest. So in credit world, I'm considered a deadbeat, which means the credit card companies really don't like me because I don't owe them lots of money in interest and fees and penalties. In essence, I owe them nothing and I get the merchant protection. Using a debit card to make a purchase, however, is much more dangerous because, again, they're withdrawing actual cash from your accounts. And that's where you have to be cautious. There are certain types of machines that they can put skimmers, for example, on ATM machines. One story I read said, I think it was in New York City, somebody put up a device that said, clean your credit card here by swiping it. Come on, people.
Clean your credit card?
Clean your credit card.
Like what, you swipe it and it goes to a zero balance?
Yeah, that's exactly what happens. Well, they're swiping it because they're taking your number. And it's not usually just a one-person, criminal person doing it. It's usually brokers. It's a big outfit, where it's multiple people. It's a corporation. It's an underground black market corporation of people that sell this information.
Wow.
Mm-hmm.
I can't imagine anybody would actually fall for that.
There's a lot of people.
Apparently.
Yep.
Wow. All right. Well, there's so many other things that I want to talk to you about. There's some other questions that I have because, again, a lot of this hits home for me because, like you said, a couple of the big things are car loans and a home loan. Like I'm in that stage where you have to start looking at your credit score because I want to buy a house.
Right.
I want to see what my credit score is like. So we're going to take another quick break. When we come back, we'll talk a little bit more about ID theft and, what people can do. And, I'm sure I'll have some other interesting questions for you.
You always do.
You're tuned into the Half Empty, Half Full Talk Radio Show. We'll be right back.
I've made a few.
Do you suffer from back, neck, or body pain? Do you suffer from migraines or have jaw or face pain? Has conventional medicine failed you? Were you injured or in an accident? Call chiropractic physician Dr. Dan Maddock at 813-935-1664. Dr. Dan has helped thousands of patients gain relief for more than 30 years. Dr. Dan is caring, gentle, and takes his time with each patient. He's also a past president of the International Craniopathic Society, a special certification of only 300 chiropractors worldwide. Dr. Dan helps patients from the neck up and the neck down. Dr. Dan accepts most insurance plans. Don't continue to live in pain. Call 813-935-1664 today. That's 813-935-1664 and get on track to better health. Consumers, do you have bad credit? Can't purchase a house or car? Paying too much in interest on your credit cards and loans? Scammed by credit repair companies? There is hope. You can get back on track and do it the right way. Call Credit Education Consultants today at 813-500-6064. That's 813-500-6064. Or go to crediteducationconsultants.com now and get the help you need. Don't delay. Call today. Mortgage reps and realtor inquiries are also welcomed.
Time after time, I've done my sentence.
All right, and welcome back to the Half Empty, Half Full Talk Radio Show. Your host, Kris Dunn, filling in for the consumer champion, Laurie Zoock. We've been talking about ID theft. We've been talking about credit coaching and what you can do to prevent yourself from falling into debt, what you can do to get yourself out of debt. Before we went to break, I was asking Laurie, I was talking about a little bit of a personal example and how I'm at the point where I'm going to be looking at buying a house. You mentioned that you have a little bit of experience in that world as well. What are some of the big things that you need to do, and how far in advance do you need to start worrying about your credit before you actually close on a house?
It's a really good question and a tough one to answer. I would say a minimum of 6 months beforehand. If you think you have good credit and you don't think you've had a lot of issues and you're probably not a victim of identity theft, at least 6 months in advance to be sure. If you haven't pulled your credit and you have a mortgage person pull it, you might go into shock, and it could take a year to 2 years, depending upon how bad and what's reporting, on your reports. So the first thing, before you even go to talk about money and qualification of the home based upon your income, for example, the very first step is actually pulling your credit report, which again, you can do for yourself, or you can have a mortgage person do it. When a lender does it, it does take a few points off your score. However, a lender's report will have even more information than the report you would pull as a consumer for yourself.
Okay, so now for me personally, I think if you were to ask me, I think in my perfect scenario, I just moved into a new place.
Okay.
And I signed a 1-year lease. So in my head, when I move out, when my lease is up at the place that I am in right now, I will be moving into or looking to buy a home. I've never pulled my credit score. I have no idea what it is. I know there are probably several negatives on it from when I was younger, when you're young and dumb. Should I be pulling my credit score right now?
Yes, you should be pulling your credit reports right now. Again, while you do want to know your scores, more importantly, you want to know what's on the report. How many negative items do you have? Has your payment history been perfect or imperfect? And I want to just give you an example. Late payments on any credit line are a lot of points. Again, FICO doesn't reveal that, except in the event of if you're late on a mortgage, it's 1 to 200 point hit on the first late on a mortgage payment, which is huge. Each subsequent one is less, but that first one, and the higher your credit score, the more likely you are to get the 200 point hit. Now, other hits on your credit, it could be 20 points, it could be 50 points again, all hard to say. But when you make that late payment, yes, you can move a positively reporting credit line on your credit report into the negative items section just by making that one late payment. So if you've made that one late payment and it was the first time and you've had that credit card for a long time, certainly you can call up the credit card company, for example, or the creditor and say, hey, made a mistake. That it's still your responsibility. Even if you didn't get it in the mail, you should know when all your bills are due. If it's a one-time event, you got a pretty good chance of having them reverse that. However, if you are consistently late with your payments, then you are looked at as a poor credit risk by someone that wants to give you a mortgage. They're not going to give you that mortgage. So the first step in buying a house is find out where your credit's at. Second step is, obviously to pull your credit. If you've done it through a lender, now you have the mortgage person. Find a reputable realtor to work with. Realtors and mortgage people tend to work together, and usually you can find one or the other that way. And then at that point, they'll qualify you. Now, a lot of mortgage people will do a pre-approval. A pre-approval is the same as a pre-approval for a credit card. It's an incentive to get you to apply. However, a lot of times people are declined or they're pre-approved for a much larger amount than they can actually afford to pay. Now, in recent years, with the mortgage meltdown, things have changed and everybody's tightened up and there are new laws and regulations. But you want to yourself figure out a budget of what you're spending every month and get an idea. I could tell you, Kris, when I bought my first house, I went to the owner before I bought it and I said, would you mind sharing with me, your monthly utility bills? What does it cost to insure this property? What are the property taxes? What are all the extras that I need to pay other than, food and entertainment and furniture and things like that? So I had to develop my own budget to say, hey, okay, now here's what it's going to cost me to live. Here's my income. I can go into that little, like for example, bankrate.com has that little amortization thing. And I could go in and say, okay, if the house costs $200,000 and I put down $20,000 over a 30-year time period, it's going to show me what my monthly payments are. So using that helped me determine how much money I'm going to put down. And then could I stick within my budget? And at that time, that's what I did. And I knew that I could qualify for that house comfortably. I think a lot of times people buy much more house than they really can afford, and they don't take into account things like emergencies. So the way that I was brought up, and the way a lot of financial people will tell you is you should have at least 6 months worth of living expenses in reserve so that if you have an emergency, you don't have to be late on your mortgage payment. You have the backup plan. Most people have no backup plan. Even think about.
Right. You talked about having your own budget.
Right.
Which is important.
Right.
Couple things I want to touch on because we are running out of time. What are some tips that you can give out short of coming in for a session or hiring you as their coach? Sure. As far as a budget, I know there's some things out there I've heard of like Mint.
Yeah, Mint is actually free. Mint.com is the one that I recommend because it's free.
Yeah.
I don't actually teach budgeting. I will tell them who they can go to. Mint.com is the one I recommend. Okay. But, you could use Quicken or QuickBooks where it's forcing you to figure out what your expenses are. But you can also do it manually. I mean, you can laugh, but I remember, when I was younger, my dad saying, hey, for 1 month, carry a little notebook, and every dime, every penny you spend, write down what you spent it on. And at the end of the month, total it up. And it kind of throws you into shock, and you go, wow, I spent, $400 going out to eat this month.
Yeah.
Do I really need to do that if I want a house? So it forces you to choose your priorities.
All right. And that's exactly what I've noticed is I've done Mint for a little while, and I've looked at it, and I'm like, oh my God, I spent $150 last week. Real quick, what are some of the ways, what's the easiest way for your credit to go up or go down?
Well, the easiest way for it to go up is to pay down your credit card balances. The easiest
in installments or like pay it off as soon as you can?
I would say pay it off as soon as you can and pay off the highest interest rate credit cards first.
Okay.
But keep in mind, when you go to qualify for a mortgage, you want to run like a $50 balance for a couple of months beforehand. So you're almost paid down, but you're showing just a little utilization, and that keeps the scores up. And then to answer the other question, the most common mistake people make is that they pay late on something. Well, you know how you can never be late on a credit card payment? Instead of waiting the 30 days, if you're going to use credit and carry a balance, make a payment every other week. If you make a payment every other week, say the 1st and 15th of every month, you'll never have a 30-day late payment. Not ever.
Right.
And that's an easy tip.
If you can do that, if you can make that work.
Right. Don't live on credit. You don't want to live on credit.
Right. And that also ties in with creating your own budget. You have to know if that's something you can do. If you can double up payments, you'll never, like you said, never have to worry about it.
Right. You got to determine, is it a want or a need? How bad, Kris, do you want that house?
Right.
And what are you willing to give up in order to have that house? And you need to have comfortable amount of backup money.
Always a learning session, Laurie.
Of course.
Always a learning session. I appreciate you taking the time to, sit down, especially with me, because I know, usually you're the one who's behind the curtain, behind the glass, interviewing other people. And, we don't always get a chance to, I guess, pick your brain. And so for me, this is great because it ties into a lot of my things that I'm personally looking at. Right. But I know that the listeners out there, they're all in the same boat as me. Everyone out there is looking to buy a new car, or they're looking to purchase a new home, or they're looking to buy some new item, some new fancy gadget, especially this time of year. So I thank you, and I appreciate you taking the time and allowing me to, interview you today. So again, thank you for that. Thank you for joining us today on the Half Empty, Half Full Talk radio show. Laurie, what's your contact information?
My contact information is 813-500-6064. My website is crediteducationconsultants with an S at the end.com.
All right. Thank you again, Laurie, so much for allowing me to interview you today on the Half Empty, Half Full Talk radio show. Join Laurie every week for a new Half Empty, Half Full consumer advocacy talk radio show. We'll learn something new every week and get smarter faster. Be safe.